Hey, good morning, Dwight. Morning, Sydney, Jim, Gary, Ron, Joel, and Donna. Nice to see you guys in here today. How are you guys doing? 8:59 in the AM, Eastern Standard. For you poor saps in the Pacific, it's totally different. Can you guys hear me all right? I'm a minute or two early, so I'm not going to get going just yet. Awesome. Awesome, awesome. Coming at you from beautiful Plano, Texas. I like telling you guys where I'm at because it's pretty cool. When you do this, you can do this anywhere. You don't have to be in the same location, taking the bus to the same job, wearing the same suit, right? It's amazing. Good data is bad news. I don't know what that means. What does that mean, Gary? Because the numbers are green? That's Wednesday, Thursday. What data is good that made it bad news? Const oh man, hold on. All of my filters are crazy. So guys, this is one of the things that I do is I go to forexfactory.com/factory. Um, wasn't CPI yesterday? And then I'm going to filter out all the noise, guys. I'm going to get rid of the stuff I don't need. I'm going to look at America and I'm going to look at the event types and I'm going to apply my filters and I'm going to come, oh, that was today, huh? So PPI, no, we had some CPI, we had some PPI today. We had CPI today, PPI yesterday. All the PIs with the guys, I'm not gonna lie, I have no idea what it means. Unemployment claims went down. That's a good thing. Get to work, right? What is a CPI? You guys have any idea? I don't. Change in the price of goods and services purchased by consumers. So, Gary, wouldn't that bigger number be bad news? Cold popcorn index, I like it. So, Gary, wouldn't a higher number on CPI be bad news, not good news? Because the cost of products being purchased by consumers has gone up rather than down, which means inflation is still in place, which is all the more reason for you guys to learn your patterns and become day traders, right? Um, Green doesn't always mean good, right? If unemployment claims went up, the number would be green, but it means more people aren't working. So that was fun. That was a fun little exercise, but I'm not going to lie, guys. I don't worry about any of that. I couldn't care less in regards to my trading about the core CPI or the CPI M&Ms or the CPI YY. It's fun to say. It flows nice off the tongue, but the reality is I knew that there was high impact news right there at 8:30 a.m., which meant that I was staying the hell out of the market. And let me show you why, just in case you weren't in front of your computer screen. Nice job, Gary. Patterns repeat themselves regardless of news. They do, don't they? But check it out, guys. This was NASDAQ. I thought this was kind of fun. It was 8:30 news. Let's just put 8:30 on the screen. That's what happened during the news, guys. There was a 50-point drop all the way to Fibonacci support. Look where it came from. Fibonacci resistance. Nothing to do in there. It happened in a fraction of a second. Good morning, Jose. But you're absolutely right, D-Rock. The patterns repeat themselves regardless of the news. Look at this. Support holds straight to the midband and resistance. The large triggers don't follow. It closes the gap. Triggers stay above support. The market goes up. Triggers stay below one-to-ones. The market goes down. You can, through rule number 2, stay out of the fluctuations. And eventually, resistance wins over support. The market breaks. I took a little snippet right here with a clear path. And then we got to support and there was nothing to do. Support holds, the market goes up. I do know that my brother went long right here, took profits somewhere up here, and now we're just waiting for the market to pan out. But the patterns are the same, guys. They repeat themselves every day. So what you have to do is learn the patterns, understand them so that you can trade them. But understanding when the news is going to happen, absolutely, D-Rock, and thank you for that. On a trade by trade basis, guys, if you base your trading methodology on one trade, you're either going to be ecstatic or defeated. Um, that's a great point, D-Rock. Thank you. So the idea is to take a trade that you can look at 20 exact replicas of that trade. Does it win more than it loses? That's the basis for a plan. What a great segue. Not one trade, guys, because, I mean, oh my gosh, if you got despondent over one trade losing and you were like, oh, I have to change everything, I need more charts, I need more indicators, you would be in a constant whirlwind. But if you take 20 trades and you're like, oh my gosh, I won 70% of them, then you understand that you have a statistical advantage every time you trade that pattern. And that's exactly what we do in this classroom, D-Rock. So thank you for that. That was a perfect segue. Um, I teach patterns, guys. I teach you to read indicators. I help you learn to be a chart reader. And everything that I talk about, and I think this surprises a lot of people, everything that I talk about is available to you. Oh, Daryl, I'm sorry. Yeah, check news every day. Every day. You know, it's funny. I don't think I've started this class without a news check in 2 years. Um, that's just part of my routine. Yeah, emotion got you. I'm sorry that happened to you, but what a great lesson, right? You're going to look at that black eye in the mirror for the next week and remember not to poke the bear. Just a tough lesson, man. I'm sorry that happened, but I'm glad that you learned the lesson. I bet you never miss news again. We've all done it. We've all forgotten about it. Um, I know I have, and it never works out well. It never just runs in the direction that you wanted it to be. It spikes out, takes you out, and then runs in the direction you thought it was going to go. Guys, there are no secrets in Nexgen, and I mean none. There are no, here's a little, buy some more. And talking about buy some more, if you ever reach out to tech, if you ever reach out to anybody in Nexgen and they ask you for money, it's a scam. NextGen is not going to ask you for money via text, via Skype, via anything. I had a buddy of mine downloaded software the other day, and then he went to Jason for help, and he got a text via Skype that said, absolutely, I'd love to help you. It's just going to cost $800. And he sent me a text. And of course, he's like, what the hell, Mark? I was like, dude, it's a scam. Report it, block it. So we're going to give you everything. I'm going to give you everything that you need, guys. And the first thing that I'm going to give you is the rules for a high probability trend trade. This is going to be your focus for your first 20 days with NextGen. And let's see, I know I've got new people in here. And guys, let me make something very clear. Being new doesn't mean that you're on demo. Being new means that you're not making money consistently yet. I've got new people that are 3 days in, and I've got new people that are 2 years in. Everybody learns at a different pace, and that's totally cool. I learned at a different pace. I have such a big ego that I fought patterns for a long time. I fought rules for a long time. Took me a while. So everybody gets there when they need to get there. But the idea and the easiest way to get there is to keep it simple. So what I do is every morning I say the same thing over and over. I talk about a high probability trend trade. And this is a trade where every indicator on every one of your charts is going to agree for the trade. This is when your triggers are the strongest. There's nothing in the way between you and your target. And the rules for this trade, as taught, is a trade that typically wins 70 to 80% of the time, which backtracks to D-Rock's statement. It's going to lose. You will lose. You will take losers as a day trader. If anyone has ever told you you're going to win 100% of your trades, guys, that's a huge red flag. I'm going to tell you very honestly, you will take losers. But if you stick to a plan that has a statistical advantage, Exhibit A, and you keep it simple and focused, there's no reason that not only will you take more winners than losers, but also your winners should be larger than your losers. So We're going to focus on a high probability trend trade today, and it only has three rules, and each rule creates an advantage. And in the spirit of simplicity, those three rules happen on two charts. And you will see people in this room posting additional charts, posting extra information. You'll also notice, if you have a keen eye, that most of them don't use the extra charts. That they have them because someone over in the traders chat had them. They had them because John Novak showed it to them. And there's a lot of people that add additional information without ever actually using it, and all it does is it confuses the process. So I'm going to encourage you to keep it simple as a brand new user, as somebody looking for consistency. And always let the large chart lead the way. It's a two-chart process. The large chart's a broad stroke of a brush, guys. The large chart is what the people in charge want to have happening. Amen, Ron. The large chart is with the people with the money, the people that move the market, the people that establish the trends, the people that react to areas. Guys, the large chart's telling you exactly what they want to have happen. Um, so we use the large chart to define areas, direction, momentum. And your first two out of three rules, your first two advantages come from that large chart. You should never even look at a small chart if those advantages aren't in place as a brand new user, because it means that you don't have a statistical advantage getting into a trade. But once the rules are met on this broad stroke of a brush, and when I say broad stroke of a brush, guys, you're going to get direction, momentum, and areas from one bar. Once you have it, now look right. Now go to the smaller chart. And this smaller chart, what happens in that one bar on the large chart literally happens in 15 to 30 bars on the smaller, faster chart. We don't take entries based on the small chart, but we use that small chart as a refinement tool. We take the broad stroke of a brush and we're literally going to carve it down to the area where the market is most likely to continue. And your rule number three of three, guys, only three rules, three words basically, is going to put you into the market where it's most likely to continue. Um, and this is really what we focus on for the first hour. It's the same hour every day. I believe in the plan 100%. The plan that I'm going to share with you in a little bit is pretty much the exact same plan that I trade every day in my own personal trading, because I believe in it. I don't need more than that. I don't need to be fancy. I don't need additional charts. And I firmly believe that you don't either. But it will be up to you to make the choice. So let's talk about the high probability trend trade real quick, guys. Why are we doing it? We're taking high probability trend trades as brand new users, and honestly, we're only focusing on the entry, the best of the best, getting into the market where you have the most advantages. Because when you're taking a high probability trend trade, every indicator on every chart agrees with the rules for the trade. Your triggers are going to be the strongest. There's no termination conditions. We're going to talk about those. And there's no trouble spots between your entry and your target. Guys, this is literally the high probability trend trade is a bowling ball halfway down the lane and the bumpers are up. You have every advantage. So this is what we're going to focus on initially because it's a trade that typically wins 70 to 80% of the time. And I'm telling you right now that confidence comes through the memory of success. That is a phrase that has stuck with me for years, and it's so true. If you've ever learned anything, that little moment, that aha moment where you get it, man, celebrate it and build off of it. Embrace it, because that's what the high probability trend trade is going to do for you. It's going to give you that feeling of success. And then more importantly, it's going to make you a chart reader. All right, Gary. You guys know that if you walk out of the room, I can't see you, right? But I like that you tell me that. Um, Guys, chart reading is going to be 90% of your day, and chart reading is going to be you looking at your indicators and letting them tell you what's going on in the market rather than you making a decision about what you hope is going to happen or what you assume is happening or what you wish would happen. You're going to be a chart reader and you're going to be able to understand three very key concepts. And these concepts are going to be universal across the board. I don't care what market you're trading. I don't care if it's your stocks, if you're hedging your options. I think that's a thing. I picked up that phrase from John Novak. I don't know what it means. Um, if you're trading futures, but you're going to become a chart reader and you're going to understand where the market is likely to continue, guys, and this is going to become the entry point for that highest probability trend trade. Getting in at the best of the best area that's going to allow you to reduce your risk, that's going to allow you to maximize your profit potential. Your chart reading will identify that area. It's also going to identify where the market is likely to go. You're going to be able to use momentum, you're going to be able to use direction, and you're going to be able to use areas to understand as you develop a management plan where that profit target should be. And then finally, and most importantly, you're going to understand where the market is likely to stop, guys. If you're focused on a trend trade, understanding where the trend is likely to end gives you a huge advantage, and it keeps you from taking that last trade that drains money from your account. It keeps you from taking that trade into an area that may reverse the market. These likely to stop areas are called termination conditions. Termination is right there in the name. And this is probably the most broken rule for new users, is trading into areas likely to stop the market. Seemingly perfect trades don't work out. And we all pretend to be surprised when they don't, even though we know that we knew the market was likely to stop. So guys, we're going to focus on just reading our indicators, and we're going to do it through the education of the high probability trend trade. And we're going to focus on these three simple rules, guys. Each rule gives you the advantage, and it's the advantages. Put them together, shake them up in a bag. That's the recipe for a trade, guys. So a trade is nothing more than having momentum because your large chart gave you strong triggers, and then to that momentum, making sure that the path is clear, that there's none of those likely to stop areas, none of those termination conditions, which is going to give you room to your profit targets. So the advantage of momentum plus a clear path is going to have you looking for the point where the market is most likely to continue. That's rule number 3. That's your refinement chart. So I'm going to break each of these down into individual parts. And as you're learning the software, do the same thing for yourself. Break it down individually. Don't become a trader. Become a chart reader. Your chart reading is going to take you to understanding how to be a trader. So we're going to take the first hour and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I'm going to give you a very basic plan. I am going to encourage you that if you have any challenges with any parts of this plan, individually or as the whole, I want you to use your voice, guys, because clarity is the goal of this classroom. And whether the first hour takes 45 minutes or if the first hour takes 2 hours, it doesn't matter to me. It's okay. My goal is that you understand. And if you don't understand, I need you to use your voice. David Bout, did you just have an aha moment? Good morning, Miss Debbie. Be a chart reader because traders look to enter the market. Chart readers wait for advantages. And it takes a while to get there. But you will get there, but it starts with learning the rules, guys. Know what you're looking for. Be able to identify it at a moment's notice. Y'all are going to simulate. Ooh, I said y'all. I'm back in Texas. Ha! You're going to simulate. You're going to practice over and over. Your simulator gives you monopoly money. Your simulator has zero risk of loss, zero risk of capital loss. It is never going to make you rich, but it's never going to make you poor. What it is going to do is it's going to let you practice and test boundaries and test rules and make all the mistakes that you can make. Because if one thing that we know to be true is that people learn from mistakes more than they learn from successes. If nothing is ever difficult, you're not prepared when it is. So you're going to post your pictures of everything that you do in class, but you need to do it, win, lose, or draw. Share everything. Show me everything. And then we're going to simplify a lot, guys. We're going to focus heavily on the high probability trend trade, the advantages that it provides. And as we talk about trades throughout the day, Gary, you said that you were gone until the open, man. So like 12 minutes, Gary. Come on. I'm just kidding. Always post, guys. Post in the room all the time. That's what the second half of class is for, is looking at your great pictures. But we're going to simplify. We're going to focus on a high probability trend trade where every indicator on every chart agrees for the trade. You have to learn the looks so they become easy. Notice that I said learn the looks. What does it look like when the rules are met? That's a very key concept of what we do because like D-Rock said earlier, we're just trading patterns. We're never in control of the market. What we are in control of is whether or not we have that statistical advantage every time we pull the trigger. Good morning, Tony the Tiger. So we're going to do it. Three rules, and you're going to commit right now to two options when you are thinking of entering the market. You're either going to have your rules met, which means pull the trigger, or your rules are not met, which means sit on your hands and do absolutely nothing, which is actually going to be the hardest thing that you ever do as a day trader, is absolutely nothing. But remember, 90% of your day is reading indicators, 10% of your day is looking for these advantages as a chart reader so that you can become a trader for that 10%. Everything starts with the trend, guys. Rule number one says that you must have strong trigger lines. Strong trigger lines can only happen if you're trading with the trend. There's zero way around it. You can't almost be trading with the trend, right? You either are or you are not. And if your background on the large chart is green, the trend is up. You should only be looking for rules to be met for high probability trend trades long. Notice that I didn't say you should be going long. You should be waiting for rules to be met, looking for rules to be met for high probability trend trades long. If the background is red, you should be looking for rules to be met for high probability trend trade short. And I'm going to tell you through my own experience that if you never fought the trend, it would eliminate an enormous amount of mistakes from the new user's plan. An enormous amount of mistakes. And let me show you how easy it is. Guys, this is the NASDAQ. Are we trending up or down in the NASDAQ? What do you think? This is where new users, this is the easiest way for you to break out of your shell. Absolutely, we're trending down, David, Dwight. So let's go to a different market. That's the S&P. Are we trending down or up? Guys, you're halfway there. Whoa, there's crude oil. Oh, let's get to the most current bar. Egads and little fishes. It's going down, guys. That's how easy it is. That's how easy it is. It was up and then I changed it. My bad. I was pushed over a little bit. So guys, the trend is your friend, right? The trend is your friend. The trend tells you which direction you should be looking. Once you've established it, you're going to make sure that you have strong triggers. This is rule number one. And when you have strong triggers, you have the advantage of momentum. The people in charge are pushing the market at an enormous rate. In an uptrend, in order to have strong triggers, your small triggers must be above your large triggers, solid lines above the dashed lines. Both should be wide and open in the direction of the trend. Notice down here, small triggers pinched, large triggers pinched. There's zero momentum in this moment. But when they're both wide and angled in the direction of the trend, when there is space between small and large, guys, like scissors open, prepared to cut. You can't cut with closed scissors. This is your best of the best. This is that strong trigger look. And that strong trigger look is going to happen all day long, right? And it's also going to not happen all day long. So you got to kind of wait for that separation. Give yourself that best of the best look. Because when you have it, the odds are favorable for the market to continue in the direction of the trend. In a downtrend, when the background is red, your small triggers must be below the large triggers. Both should be wide, angled in the direction of the trend. The space between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. And I love that phrase, odds favorable. It makes me feel good about looking for my next rules to be met, because when I have odds favorable momentum, that's the best of the best look for buying Fibonacci support on that smaller, faster chart, or selling Fibonacci resistance on that smaller, faster chart. And guys, I want you to see this bar. Remember, we get our information from one bar on the large chart. Notice that the background is green. There's separation between the small and the large. They're wide, they're angled in the direction of the trend. On a large chart, if you scroll back, you're going to see these amazing tails, these wicks. What these are pullbacks, little pushes against the overall trend on that smaller, faster chart. You as a Nexgen rules following user, you're going to be able to pinpoint right where the bottom of that tail is likely to form using that smaller, faster chart. That becomes your entry for the highest probability trend trade long, or this little pullback becomes your entry for the highest probability trend trade short. I'm going to show you how to piece that all together. But first, I want you to commit yourself to giving yourself the advantage of momentum, odds favorable momentum. is what we're going to call it in this classroom day in and day out. Because when the small triggers return to the large triggers, when those scissors close, this is what we call a weakening of the large triggers. And anything can happen up or down. Embrace the language. Odds favorable, anything can happen. Strong, weak. Which one do you want to bank your money on, right? Because weak triggers very often precede a reversal in the market. Weak triggers don't give me the advantage of momentum. The market may push beyond my best of the best entry. So rule number one has you focused on the advantage of momentum every time you take a trade. And it's not going to happen all day. You're going to go from odds favorable. The market's going to push right to those anything can happen weakened triggers. Notice that there's a reversal. Guys, this chart doesn't even have the benefit of Fibonacci. Weak trigger says no more. The market reverses. Gives me odds favorable. There's one of those tails. Nexgen users got in right where my cursor is. Carried it up, made some money right until those triggers weakened again. At which point they said, no more trades for me. I don't know what's going to happen. Neither does the market. The market reverses, provides odds favorable. There's one of those tails once again. Guys, it's what you do in between the moments of momentum that's going to define you as a trader. It's your ability to do absolutely nothing when there's nothing to do that's going to give you a huge advantage over the average trader. Sometimes trigger lines don't agree with one another. Sometimes the trigger lines don't agree with the trend. This is where the forces that move the market are fighting. They're battling. They're punching each other in the nose, and one of them is trying to win, whether it's buyers or sellers. Next-gen users do not have the advantage of momentum in this scenario, which means that you're no longer looking for high probability trend trades because your rules aren't met. This is where most people are tempted to predict what the market will do rather than waiting for rule number one, and it gets traders into positions without the advantage of momentum. And that's a very wordy way of saying these are traders risking their capital on hope, on opinion, rather than momentum. If you sit tight, eventually somebody's going to win and they're going to give you that momentum again. So, guys, this is rule number one, odds favorable. You're going to hear it all day long. I want you writing it on your charts. Odds favorable. Small triggers below the large triggers. That's a good momentum look. Not anymore. The large triggers flattened. They went up. See how quickly that can happen. Small triggers below the large triggers. The large triggers are wide. Guys, give me a Y. The first bar has defined the trend with a red background, and now it's defined momentum with strong triggers. That's all I'm looking for at first, is making sure that I have that advantage of momentum. S&P, small's below the large are wide, everything is angled in the direction of the trend. Guys, once again, this first bar is giving me the advantage of momentum. It's telling me that I've satisfied the requirements for my first rule. I have strong triggers, but now I have to make sure that I have a clear path. Now I have to make sure that there's no termination conditions present. And guys, this is the one that's going to keep you safe. Termination conditions and understanding how to recognize them is going to keep you out of a boatload of trouble. So what is a termination condition? Termination condition is a Fibonacci-based indicator that may reverse the market. I want you to notice that that word may is in there, that it's a different color, and that it's underlined. Areas break all the time, otherwise the market would be caught between two lines all day long. But termination conditions may reverse the market, which means that when they're present, you do not have the advantage of a clear path. So what are the areas that may reverse the market, guys? They're blue Fibonacci support and red Fibonacci resistance, yellow 1-to-1 dots. It can be a cyan divergence low line or a magenta high line. All of these are happening on the large chart, guys. It could be a large chart midband if the triggers are a full bar away. All of these areas can stop the market. All of these areas can reverse the market. Do I wait for the second large trigger? So, Dwight, great question. There is no second large trigger. It is two lines that form a large trigger, and each line is the boundary of the large trigger, if you will. It's like a sock, right? So the same way the small and the large work together. Oops, let me find that picture again. Let me just open one up. The small triggers are two lines. The large triggers are two lines. It's not two separate triggers. The two lines act together as a trigger. Does that make sense, Dwight? So when we start going through the idea of whether or not an area is broken or not, absolutely. Both lines of the triggers must be through the area to consider it broken. And we're going to go through how to identify broken areas and areas that haven't broken. And everything begins with price reaching the area. And when I say that, I mean that these dynamic Renko bars, um, they reach the area. Price hits one of those Fibonacci support, resistance, yellow one-to-ones, because these lines are where the deep pockets investors, the institutional guys, this is where they're making decisions. This is where they're taking profits. This is where they're entering positions. Guys, you have the advantage of knowing where these areas are. A lot of people don't. A lot of people get crushed in the market and wait for patterns. You have a giant red or blue line telling you exactly where it's likely to happen. So if price comes down and reaches Fibonacci support, those price bars come to Fibonacci support in this picture. The only thing that you have to do is ask yourself, where are my trigger lines? The exact same trigger lines that provided me momentum, where are they in relationship to the area reached? If the market is trending down and it reaches Fibonacci support and your trigger lines remain above that area of support, this is an area that may reverse the market. This is a termination condition. You no longer have a clear path. So guys, give me a Y in the room if you're comfortable with that idea. When price reaches an area and no trigger lines break through, you don't have a clear path. Let's see if we can find. So crude oil. Price reached Fibonacci resistance. None of the triggers broke. Nexgen users knew not to go long into that resistance. And the second side of it, price reaches Fibonacci support. The trigger lines remain above. Absolutely no shorts into that area. And guys, look at the reaction of the market off of those key areas. This is how you can define a consolidating market. From support to resistance to support. And then we get to resistance again and price reaches and the triggers are below. And we're not going long into this area because it may stop the market. And guys, remember that 90% of your day is spent reading indicators, waiting for that advantage. So when do you have the advantage of a clear path? If price reaches support up here and all the triggers remain above, guys, there's nothing for you to do. The market's either going to break through the area or the area is going to reverse the market, or you may get that dreaded consolidation where buyers and sellers are fighting over whose decision gets to win. And you'll see fluctuations right around these fib areas. But once your small triggers, solid lines, and your large triggers, dashed lines, get to the other side of an area, we're going to consider that area broken. So in this example, both the small and the large triggers got below this area of support. You'll notice that the area of support begins to act as resistance. The area is now broken. Both triggers are on the other side. The path is clear. Rule number 2 is satisfied. So check this out. I have odds favorable momentum. I also now have a clear path. There's one of those tails, guys. There's one of those potential entries for the highest probability trend trade that you can take. The recipe will never change. Price reaches. Where are my triggers? Write it down on a piece of paper, right? Speak it into the microphone somewhere, record it. And here's a picture that does that for you. And this is a great little study tool, guys. As a brand new user, these are your options. You either have a clear path or you don't. You either have a high probability trend trade or you do not. And if price reaches the area and absolutely no triggers break through, you're sitting on your hands and you're waiting. You're exercising your patience and you're saying to yourself, I'm not willing to take a guess. I'm going to wait for clarity. I'm going to wait for confirmation. I'm going to wait for my indicators to say it's time to go rather than my gut that just really wants to be in a trade. And then once the small and the large get to the other side of resistance, you can see that it behaves as support. You'll also notice odds favorable momentum in one of those tails. Guys, a little bit of patience is going to keep you out of an awful lot of trouble. No triggers, not broken, no clear path. Both sets of triggers, areas broken, the path is clear. Everybody's good with that, right? You're going to have to go through and study it. You're going to have to be able to recognize it in the moment, but the concept will never change. Trigger location identifies whether or not an area is broken. This picture in the center, this is the beginning of your branching out from the most basic high probability trade, and this is a medium probability scenario. And a medium probability scenario means that there's a problem. Areas break all the time, right? Areas typically break with odds favorable momentum. When the forces in charge are pushing the market with such a force that there's a huge space between your small and your large, that they're angled and they're flying in the direction of the trade, 6980 has the potential to break. I gauge its potential to break on the location of the small triggers. The small triggers have absolutely smashed through the area, but the large triggers have not, which means that the area can't be broken because it takes both sets above to break it. This will be your look when areas have the potential to break, guys, but it is not a clear path because it hasn't been broken. And this is going to set you up for what your second trade is, which is a medium probability trade, which means that there will be an issue that exists, and your issue is really that there isn't a clear path. Notice down here we had odds favorable momentum with the potential to break, and it didn't. The market reversed. And here we had the potential to break, and it fluctuated pretty good before it carried on and actually broke the area. So being able to identify whether or not an area is likely to break or hold is going to be a huge advantage for you. Here price reaches resistance and none of the triggers break. Absolutely no long trades. From that resistance, the market pushes through. Both small and large are below that area of support. This area is broken. Right until it reaches support and all the triggers remain above. Guys, 90% of your day is spent waiting for advantages. And look where we are right now. Price has reached resistance, even with a green background, even with small triggers up. And absolutely none of the triggers have broken through the area. A lot of you are getting excited about, I'm going to go long, I'm going to go long. Look at the green background. Sure enough, no triggers through. Look how the market reacts. It's pushing you down. This happens all day, every day, on every market. Support holds, market reverses. There's that potential to break, and sure enough, guys, that is probably one of the prettiest trades that you will ever take as a Nexgen user. And then one more. Here is that S&P. Odds favorable. Everything says down. But notice how the large triggers haven't broken through the area yet, guys. The area is not broken. It has the potential to break, but it is not broken. Look at all of the fluctuation on your smaller, faster chart when these areas haven't yet broken. And I'm going to circle one bar on my large chart. Look at how many bars it encompasses on the small chart. You're going to see this as areas have the potential to break but haven't yet broken. There's no reason to ever get caught up in that fight, guys. There really isn't. I say that a lot throughout the day. There's never a reason for you to get caught without momentum. There's never a reason for you to trade into an area that might stop the market. There's always a reason for you to wait for these advantages. So, guys, these are your termination conditions. I'm going to go back to the user guide because we're going to look at a couple examples. But keep it simple. Price reaches, no triggers, no trade. That's it. Both sets of triggers get to the other side, whether it's support or resistance. Fire away. Look for your rules to be met. The path is clear. One of the potential termination conditions are these divergence, low and high lines. These divergence lines on themselves mean absolutely nothing in terms of termination conditions. When this line prints from a pivot, it lets me know that some calculations in the background are telling me that momentum is not following price, that even though the sellers are pushing down, the buyers are mounting an attack and they're stealing momentum. So when this pivot forms and the buyers steal some momentum from them, we know it as Nexgen users right up here on the third bar. The calculations happen in here. This line does not happen from a pivot. Price does not reach this line. This pivot literally creates the line. And this is important in understanding termination conditions because the recipe for a termination condition is that price reaches the area. And that doesn't happen until over here when your price bars come in contact with that divergence low. Once that happens, you're going to ask yourself, where are my trigger lines? If they're above that divergence low, guys, you have a termination condition. It may reverse the market. It may create a bounce. It may instigate a fight. But it means to next-gen users, no short trades into that cyan line because it may reverse the market. We call this a pivot stop out. If a pivot stop out reverses the market from a low, we're going to call it a strong bottom or a good bottom. And this termination that creates a full reversal, guys, this is the anchor for the highest probability trend trade that you can take. A termination that reverses the market creates the scenario where those high probability trend trades typically win 70 to 80% of the time. And these pivot stop outs are powerful. And they're going to become even more powerful when they happen right at Fibonacci support or resistance. So this is a great reminder that 90% of what you do during the day will be sitting on your hands doing absolutely nothing, waiting for advantages. 10% is going to be trusting the scenario, trusting the methodology, learning the looks so that it's so easy that you never hesitate, guys. Because watch this. Price pushes all the way up to Fibonacci resistance, and when it gets there, not a darn trigger breaks through. Nobody that's following rules is going long into that area. It may reverse the market. Guys, this is such a safety piece as a brand new user. From there, price pushes all the way back to Fibonacci support, and all you guys have to do is ask yourself, where are the trigger lines? They're miles above support, guys. None of you are going short into this area. None of you are wishing or hoping. You're just saying, man, I'm going to wait for a reaction because I don't know what it's going to be. I'm not in control of the market. And then from support, there is a reaction. The buyers push to resistance, and absolutely no triggers break through, and that's a termination condition. And they also pushed to that divergence high, where the sellers already stole momentum from them once, none of the triggers break, that's a termination condition. And then they tap that second level of resistance, none of the triggers are capable of getting above it. Guys, this is 3 termination conditions in the same location. One of them is a pivot stop out, the other revolve around those 2 areas of resistance. Next gen users are not hoping for long trades. We're saying, I hope that this termination creates a reversal, because that sets me up for the highest probability trend trade. When it does, you guys are saying, I hope the small separate from the large, because that gives me the advantage of momentum. And then you're wishing that it wouldn't reach a termination condition so the path is clear. And then guys, look at that. There's one of those tails. There's one of your highest probability trend trades that you could ever hope for. And look at how far it screams after it. What you do here when there's nothing to do is going to define how much your account grows when you wait and pounce on the best of the best opportunity. 90% of your day is spent waiting, 10% of your day is spent trading. And this one shows the exact same scenario. And I want you to see, decisions are made at fibs. Decisions by people that control the market, people that are not you, happen at Fibonacci areas. The sellers are in control. The momentum is strong. The world is great for the sellers. And then they reach these yellow 1-to-1s. When they do, you have to ask yourself, where are the triggers? Well, the triggers remain above yellow 1-to-1s. Next gen users, even with all that momentum, say, haha, you're not going to fool me. I'm going to sit on my hands. I'm going to wait. I'm going to see how you react. And guys, this turns into a schoolyard brawl. The buyers push back right into resistance with the triggers below. The sellers fight. The buyers fight again. The sellers fight again. The buyers fight again. The sellers fight again. And here's where the buyers say, you know what? Enough is enough. The market is reversed. The momentum is great. The path is clear. And next-gen users are going long and taking that trade all the way up to Fibonacci resistance, right to where the market is likely to go with that momentum. What you do when there is absolutely nothing to do is going to define how much of this move stays in your account. If you guess, if you hope, if you wish, if you want, and you take 3 losers in a row, you might still be down money after taking the perfect win. Learning to sit on your hands when the advantages aren't present is going to be one of the best things that you can do for yourself, guys. Um, you're waiters, you're not traders. You're chart readers, you're not traders. And there's one other termination that I want to talk about. This one is the only one that's going to happen on a smaller, faster chart. This termination condition revolves around those divergences, those loss of momentums. When three divergences on a small chart print in the same price range, it might terminate the trend. It could stop things cold in its tracks. It's not guaranteed to, but it may, which means that this look on a small chart takes away your advantage of a clear path. Rule number 2 isn't met. This look, three cyan lines from a low or three magenta lines from a high, gets even stronger when those large triggers and small triggers come together. You get those anything can happen triggers. You are giving up momentum all over the place. And it becomes even stronger still when that third divergence is higher than the second from a low, or lower than the second from a high. It's a head and shoulders pattern. It adds weight. So you're going to see this look on a smaller, faster chart. Because remember when we circled the 1 bar and there were like 25 bars on the smaller, faster chart? This is going to help you see change before it happens. And you'll see this from a low or a high when your large chart seems to be turning from the middle of nowhere. That becomes a great safety tool for you guys. Um, and this is termination conditions. Look at that. Odds favorable momentum. Tail, tail, tail. Look how the market continues to push down. It doesn't mean that all the trades were ours, but with this look, it is freaking hard to hit the brakes, guys. On crude oil, we do have odds favorable momentum, but I have a couple areas that haven't broken yet. Look at how resistance held up top, and now we're pushing through. My small triggers are through with momentum, my large are not. These areas may break, but we've got to be solid on our entry rules before we give it a shot. And let's talk about the entry rules. And let's talk about the advantages that are already in place. Your large chart had strong trigger lines, which meant that you have the advantage of momentum. Your large chart was free from termination conditions, which means that you had the advantage of a clear path. So finally, once you have the advantage of momentum, once you have the advantage of a clear path, you are going to refine that broad stroke of a brush. Guys, there's a couple great pictures on termination conditions I just dropped in the room for you. You're going to refine that broad stroke so much that you're going to use a limit order. You're going to wait for the market to come to you. You're going to have that limit order waiting at a line. And the lines that we trade from on that smaller, faster chart are Fibonacci support, mid bands, or yellow 1-to-1s, or Fibonacci resistance, depending on the direction of the trade. Lines on your smaller, faster chart create an area for a bounce. It's like a brick wall that you're throwing a tennis ball up against. It becomes your best of the best scenario when those lines are inside of favorable large triggers, which means on your small chart, your large triggers, the solid, smooth, or these smooth lines, and your synthetic triggers, the ones that looked a little stepped, guys, those two sets of triggers come from two different time frames. The smooth ones are the 5-1 triggers, the stepped ones are from your large chart. But when they trend one on top of the other, like snakes riding piggyback, right? When they trend one on top of the other, wide and angled in the direction of the trend, guys, this is what we call favorable large triggers. Favorable large triggers give you the advantage of the smallest potential for a window of opportunity, the smallest point where the market is likely to continue, which allows Nexgen users to reduce risk dramatically. So embrace the idea that you want to see your trigger lines one on top of the other, because price loves to pull back to them. And when there's an area, it creates an amazing entry opportunity. So let's go through and let's talk about what it takes to find an entry. The first thing is the rules have to be met on the large chart. You have to have momentum. You have to have a clear path. Once they're met, you're going to turn your attention to the smaller chart, the refinement chart. Rule number 3 says that we're going to use a limit order to buy or sell a pullback, meaning that if we're looking for a long trade with the momentum and the clear path, we're actually going to enter the market as the small chart is trending down, or not trending down, but pulling back. A small little pullback against the overall trend. So in this case, the rules are met on the large chart. Everything's going up, the path is clear, and my small chart has strong trigger lines. It has favorable large triggers. I'm looking and I see Fibonacci support. I see mid bands. I see yellow 1-to-1s. I've made the decision that it's time to look for an entry, but it's still too soon because rule number 3 says that I'm going to buy a pullback. And a pullback starts with a reversal bar, guys, and this is one of the most misunderstood parts of the entry. You don't enter when the reversal bar prints. You define your window of opportunity when the reversal bar prints. So the second I get this down bar, when everything says up, I'm going to look to my areas that are falling inside of favorable large triggers, fibs, mid bands, yellow 1-to-1s. This is going to create a window of opportunity, a point where the market is most likely to continue, the best of the best area where the market is most likely to continue. And because of the momentum and clear path on my large chart, I'm going to activate a limit order at the top of that window at the closest to price point inside of favorable large triggers. And what that looks like is it should look just something like this. And I'm going to go through the whole process of defining your entry, because your first 20 days with me, guys, should be defining entries, getting in at the right spot, because it creates manageable trades. So we're going to start with what absolutely has to happen. Odds favorable momentum on the large chart. Clear path on the large chart. Two very solid advantages to have you looking for a trade. You're going to wait for the reversal bar on the smaller, faster chart. You will not enter on the reversal bar on the smaller, faster chart. You're going to say it's creating a pullback. Let me find my highest point of my trigger lines to my lowest point of trigger lines that are overlapped, one on top of the other, giving me the best chance of success for this trade. But this is not where the trade is likely to happen. The trade is likely to happen inside of your window of opportunity, which means from the highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. That's the point where the market is most likely to bounce. That's the point where this trade is most likely to continue. That's your entry right at the very top, the highest point of support inside of favorable large triggers. Guys, this is your go spot. Give me a Y in the room if you're with me. It's going to take you some study. You're going to go back and practice. I'm going to show you how to study this look. But guys, this is going to be your bread and butter as a brand new user, because through looking through this entry, you understand where the market is likely to continue, so much so that you've put a limit order there. You're going to understand where the market is likely to stop and choose not to trade into it. And you're going to understand ultimately where the market is likely to go. You're going to use Fibonacci off in the distance to help get you to that target. And here is the ugly dark side of trading. Are you ready? There really is no ugly dark side, guys. I love everything about it. But when this market comes back and hits my limit order, I'm in the trade. I have all the advantages. Life is good. But sometimes, because we created an area, it might push all the way to the bottom of that window, which means that if you're skittish and untrusting, as most people are when they learn the software, you're going to panic a little bit. You're going to see red numbers against you. You're going to see that you're down money, that you're down ticks, and you're going to start to question everything in life. And it's okay. I want you to remember that the large chart is leading the way, that you have the advantage of momentum, that you have the advantage of a clear path, that you are still firmly nestled in the area where the market is most likely to continue. There's nothing to do at this point. But one of the things that we can do, because the methodology is so solid, is we can identify where the market shouldn't go, and that's outside of that window. Smart traders trade with stops. I'm not saying you're a dumb trader, but I'm saying smart traders trade with stops. Smart traders understand where they no longer want to be in a trade. Next-gen users, you know exactly where the market is likely to continue. Therefore, you know exactly where the market shouldn't go. Your protective stop is going to go outside of that window of opportunity. And in the event that this market continues beyond the window, you're going to have a stop and you're going to get out of that trade and you're going to say to yourself, that's cool. I don't want to be in this one anyway. But as a new user, you're going to be like, oh my gosh, I lost a trade. This sucks. I hate it. I'm so sad. Nobody's going to like me. And I want you to remind yourself that anything that wins 20 to 30% of the time, or 70 to 80% of the time, is mathematically obligated to lose 20 to 30% of the time. And this is just on the high probability trend trade. Guys, if you start adding those trades where areas have potential to break, and I've had people complain to me about this. Well, Mark, my win percentage is only around 50 to 60%. I'm winning more than I lose. My winners are bigger than my losers, but I'm not at 70%. What am I doing wrong? Absolutely nothing, guys. I've seen people have successful days on 30% winners. But the idea is that if you're embracing a 70 to 80% winner as your core, as your foundation, as a brand new user, um, that's that confidence through the memory of success, right? And it's learning to accept small losses because they are a normal part of that positive equity curve. So your first 20 days is designed to do nothing more than find this great entry, because great entries create manageable trades. And your goal should be to get to the point to where you absolutely refuse to miss this trade when the rules are met, that you learn the Fibonacci and trigger line rules, that you get this look committed to memory so that you never miss it when it happens. Because this is your foundation, guys. This is your chart reading. This is the one that's going to make you feel confident, that's going to make you feel good. And the cool thing is once it goes in the direction of the trade, if this one is going to do what the market says it's going to do, you're going to take your stop from all the way outside of that window of opportunity, and you're going to reduce your risk below the reversal bar. You're managing your risk long before you ever manage your profit, because you waited for the pullback to the areas inside of favorable large triggers. Your risk is the least amount that it could ever be. But more importantly, your profit potential is its absolute greatest, because you're getting in the furthest point away from that potential entry. And then this is the one that's going to get you new users. See a lot of entries at the top of this bar. A lot of holy smokes, that's going without me entries, guys. And this is going to happen as you develop trust. I also see a lot of entries over here, afraid that it won't get to their order. What does that do? More than anything, it guarantees a bigger loser if this is part of that 20-30%. If you jump in up here and this one doesn't work, it's just a bigger loser. If you jump in here and it doesn't work, it's just a bigger loser. But what else is it doing? It is drastically decreasing the distance to your profit target. So go through this, post them in the room. It's going to happen. And then once you get done jumping in too early, you're probably going to start jumping in too late, because you're going to be nervous and you're going to wait for confirmation 3 or 4 bars and then you're going to get in, which is really a better option, because at least now you've got a reversal bar to hide behind. You're just costing yourself money on the distance to the target. So um, some of the common things that happen, guys, but your goal is to be able to recognize entries. Your goal is to be able to find odds favorable momentum. And let's do this. Let's take all the noise off the chart. I'm going to give you a study tool. Whoops, I just hit the wrong one. We talked about those tails on the large chart. We talked about these tails being these pullback. That we don't trade tails, we trade pullbacks to areas inside of favorable large triggers. I'm going to show you how to backtest the software, guys. I want you to write on a piece of paper in the fattest marker you own on your desk, Mark Novak is full of crap, and I'm going to prove him wrong through study. That's what I want you to do. And I'm going to show you how to study it. I'm going to show you how to prove me wrong. I'm going to start it with everything is odds favorable. Everything is direction, right? Everything is trading with the advantages of a market that have odds favorable momentum and a clear path. And I'm looking for the perfect entry. I know we had some really good ones yesterday. Will you guys forgive me if I fudge just a skosh? I'm going to take everything off and let's focus on momentum and let's focus on the tails. Guys, give me a Y in the room if you see that here is a tail, here's odds favorable, and here's the market not hitting anything, right? So we're good. So let's go back to 8:17 a.m. What did the tail look like? It pulled back directly to Fibonacci support. Sometimes these are indetermination conditions. You're going to choose not to take the trade. Sometimes they're going to be areas with the potential to break, and you're going to make sure that the conditions are right. But if you scroll back and just start circling tails when you have direction and momentum, you're going to begin to see a very real correlation to the market pulling back to areas inside of favorable large triggers. And guys, this pattern repeats itself over and over all day long. The idea is that you begin to learn these Fibonacci rules, that you begin to learn these looks. That one pushed up beyond. Might have been a loser, right? But you go through and you just start studying and you just start taking pictures and you start saying to yourself, here's my picture of what I did. I circled the tail, there it is, and then writing on your chart. Writing about odds favorable momentum, writing about clear paths, writing about pullbacks to areas inside of favorable large triggers, creating that annotation on the chart, giving me tons of great information about what you see, and then posting that chart in the room, guys. Posting that chart with your rules written on the chart so that you can get feedback. Because when you're learning the software, it's not about winning and losing. It's about understanding the rules. It's about recognizing the looks. It's about developing trust in the methodology. So if you write your rules on the chart, you're reinforcing those rules. You're creating consistency. If you show me on the large chart and the small chart how they come together, you're creating recognition of the little symbiotic relationship that the two have. And make sure that you show me entries. Make sure that you show me exits. Because, guys, this is our conversation piece. And I'm here 15 hours every week. And my sole purpose in life is to give you feedback and help get you pointed in the right direction when you need a little nudge. But you have to share pictures to do that. This is your study picture. And you have to know what you're looking for, right? You have to know exactly what it's going to take to get you into the market. You have to understand the idea of momentum in a clear path, which we definitely don't have here in the NASDAQ. But we sure did have here, right? And just for grins, right back to resistance right there inside of those triggers, guys. Over and over. The area had the potential to break with this much momentum. It did. The area had the potential to break with this much momentum. Sure enough, it pulled right back to resistance right there inside of those favorable large triggers. Your goal is to begin to recognize this one in the moment. First bar tells me we're in a downtrend. First bar tells me that I do not have odds favorable momentum. First bar tells me that my path is clear. All that information, directions, areas, momentum, one bar. First bar says that I'm in an uptrend. First bar says that I can't have momentum because my triggers don't agree. And then first bar lets me know that I'm into Fibonacci resistance with absolutely no triggers through. Do you guys see how it turned blue? Does anyone have a rule for a high probability trend trade that references the color of the Fibonacci area? The answer is no. Why not? Because trigger lines determine whether an area is broken or not. Trigger lines determine price reaches, where are the triggers. Guys, I can cover this fib with a horizontal line. Have to make it a little fatter though. And I can make it, just make it white. Price reached a white line, absolutely no triggers broke, guys. It doesn't matter what color the fib is. Trigger location will define whether or not an area is broken. And I think that's a good rule because when I first started, if I saw a blue fib, I was trying to go long. And I was losing a lot of trades like that. So let's define what we're looking for, guys. You're looking for the high probability trend trade. You're looking for the best of the best. You're looking to create confidence through the memory of success. You're looking to become a chart reader. This checklist is designed to keep you focused on entries, 100% on entries, guys, making sure that those advantages are in place. And I've never had anybody check yes on every one of these boxes and do less than 70%. Typically, it's closer to 85, 90, but we like to try and give you realistic expectations. This is designed for you to print out, for you to put it on your desktop, for you to police yourself every day, for you to know exactly what to write on your chart before you post it in the room and ask for feedback. Tell me exactly why you got in. Guys, this doesn't do anything more than define an entry. That's it. It doesn't tell you where to get out. It doesn't tell you how to move stops. It doesn't do any of that. Your first 20 days revolves around entries. Here's the exact same checklist, but I've stolen pictures from the resource material about good tops and bottoms, terminations that create full reversals, what it means to have odds favorable momentum, and what it means to be stuck in that anything can happen phase. The idea of a clear path, when it's not clear, when it is clear, and when it has the potential to clear. And then, guys, there's your window of opportunity. There's your entry chart. There's identifying where the market is most likely to continue. It reminds you to wait for a reversal bar. It tells you exactly where your limit order goes. And it reminds you that if the areas are not inside of favorable large triggers, those are not your areas for a trade. They're not where the market is likely to continue. It's not your best of the best. Guys, that's going to keep you on the safe side of things a lot. But the goal is you develop a plan. The goal is that you have this concrete set of rules that you are married to, that you make sure you always follow because you have proven through study, you've proven through feedback, you've proven through repetition that they create a statistical advantage. You know that they're not going to win every trade, but you know that if you just stick to that plan, you're going to win more than you lose. This plan that I'm giving you right now is a stepping stone, guys. This is the beginning. This is you learning to become a chart reader, but you're going to have to manage these trades a little bit. And I'm going to tell you right now, and I'm going to tell you honestly, this simple plan that I'm giving you right now is 95% of my trading plan. 95% of my trading plan is the exact same thing that I teach you guys every day in the room. This plan is designed to optimize your chances of success with a high probability trend trade, those three rules on two charts, and a medium probability trend trade, guys. And that medium probability trend trade is the trade where areas have the potential to break, but they haven't broken yet. This plan is designed to give you the best chance of success on those two trades, just two trades. It's going to be your simulation, your study, your class feedback, and continuous practice that's going to empower you to create a plan that works for you, something that is tailored to your personal goals based on your experience reading the indicators. The more you're a chart reader, the more you're going to see. And it's a double-edged sword. It allows you to see more opportunities, but it also gets your brain playing tricks on you, trying to break rules. So stick to the plan, embrace the plan, guys. If you don't have a written plan, you do not have a plan. And trading without a plan, if you ask any successful trader, is the fastest route to financial suicide. So, your simple plan for consistency. Never fight the large chart direction or triggers, ever. Commit to it. Write it on the back of your hand. Come see me. I'll tattoo it on your forehead backwards. So every time you look in the mirror, you understand that that's a big deal. And then you're going to define your entry, guys. Your plan should revolve around your entries. And your entries should be something that you have 100 pictures of so that you burn it into your mind exactly what it looks like. Same checklist I just gave you. And then based on that great entry, you have to manage it, right? Great entries create manageable trades, and your management plan should be just as methodical as your entry. There should be a checklist. It should be nothing more than if then. Remove emotion, remove doubt, remove fear. Keep it super pragmatic, guys, and it all revolves around getting in at the areas inside of favorable large triggers. You've entered the market at the best of the best spot where the market is likely to continue, and the only thing for you to do is put a stop outside of the window of opportunity where the market shouldn't go. At this point, Lift your hands, right? Put them under your butt. There's nothing for you to do. You're either going to get stopped out because small losses are a normal part of a positive equity curve. You're going to get stopped out because the people that control the market didn't respect your pattern, and you're not going to do anything. Or patterns are going to repeat themselves as they do, and the market's going to give you a reversal bar in the direction of the trend, in the direction of the momentum, in the direction of the clear path, right off that area inside of favorable large triggers. At this point, you're going to reduce your risk because successful traders manage their risk before they ever manage their profits. You guys have managed your risk through odds favorable momentum and a clear path. You've managed your risk through an area where the market is likely to continue. And now you've managed it even more by reducing risk above the reversal bar in the direction of your trade. But once again, there's nothing for you to do. You're either going to get stopped out and you're going to be cool with it because of all those advantages, or the market's going to hit your first target. Guys, I love the first target. For new users, it's $100. You may change it, you may not. At $100, it's money in the bank. At $100, it's confidence through the memory of success. At $100, it's serotonin, it's dopamine. You're calling your friends, you're high-fiving your wife, the dog gets a treat. You are stoked over $100 because it means that you're a winner. The second part of that is now you've moved your stop to break even. So not only are you a winner, but you don't have anything to lose. Nothing, no risk on the trade. And now I have to tell you, that break even stop's going to get hit. It's going to get hit a lot, guys. Because remember, you're not a chart reader yet. You're keeping it mechanical and pragmatic. You want to make money and you want to reduce risk, and you're going to go to break even. But what this does for you with money in the bank and no risk is it allows you to remember that the large chart leads the way. It allows you to remember that the people that control the market are pushing it so strong in one direction with absolutely nothing in the way that you feel comfortable doing absolutely nothing to see if it hits that second target, to see if it makes that $200 trade. And guys, if it does, that's $300 in the bank. That's 300. You're going to exit. You don't care what happens next. And if you're able to catch one of these trades a day, $300, guys, that's $1,500 a week, right? That's $6,000 a month or $72,000 a year. I do this every day, reminding you that you don't have to make $1,000 a day to make money. Because if I implement that same trade, that same management, and I do it on a 4 lot instead of a 2 lot, my $72,000 year just turned into $144,000 a year. The idea that you can make more money through contracts rather than additional trades plays very well to the idea that you should keep it simple, that you should focus on simplicity over complexity. Make sure that you're using the spreadsheet that Nexgen provided, guys. Make sure that you're taking that spreadsheet. It's in your study picks folder. Here's mine. I still fill it up every day from you guys. And track everything that you do. Here, let me give you a copy of mine. For you new users, I'm going to save you a little work. Track everything that you do on that first page, guys. This is your trade journal. This isn't designed to make you feel bad about losers. Don't only put your winners in there. I see that a lot. People are like, I'm going to put all my winners in there, and then one day I'm going to show Mark my spreadsheet, and I'm going to be freaking amazing. And he's never going to know that I'm not actually making money in the market. I get that a lot. Guys, all you're doing is you're creating a trade journal. Every morning, you're going to set aside 5 minutes with a cup of coffee or a chili dog or whatever you do in the morning, and you're going to look at what you did yesterday. You're going to ask yourself what worked, and you're going to ask yourself what didn't work, and you're going to commit to that day to do the things that worked and to alleviate yourself of the burden of the things that don't work. You're going to ask yourself what felt easy and relaxed, and what felt forced and what made me nervous, because there's a correlation between your ability to follow rules and the way you feel when you're in a trade. Trust me on this one. So this brief historical study each morning is going to prepare you for the day. It's going to accelerate the learning because you're focused on concepts that may be bringing you trouble. When I filled out my spreadsheet, finally, 3 months into trying to learn the software because I'm stubborn and egotistical, what I realized is that I traded in determination conditions an awful lot, but I still didn't pick up on it. It was in my spreadsheet, but I wasn't doing the study and I didn't pick up up on it. And guys, I didn't realize my problems as a trader, the things that really needed help, until I posted in the room. And at that time, my brother was running the room. So not only was I fearful of being wrong, I was fearful of being just absolutely ripped apart by my brother in a public forum, which he never did. But what he did do is he said, "Hey, Mark, I noticed this is the seventh picture that you've posted into a termination condition. You got lucky a couple times, but you're losing these more than you win them. Is it in your best interest to be trading into termination conditions?" And it was profound. And I started searching for these termination conditions, and I eliminated trading into them, guys, and my trading got better. And then I had to work on entries, and then I had to work on momentum, and then I had to avoid making opinions, and I had to go through all the stuff that you guys go through. But I've been through it all, which is why I teach this class, because I'm trying to help you avoid it. But post your trades in the class, guys, win, lose, or draw, because if you do something wrong, you're probably not going to know. Let me help you with that. And you do something right, guaranteed, I'm going to celebrate it with you. I love celebrating victories. I think you should too. We're going to keep it super simple. You guys are going to stay very focused. And on this spreadsheet, guys, record everything, study it. Every time your rules are met, one of those high probability trend trade rules are met, put it in your spreadsheet so that you can come back and click on it and say, you know what? That's the perfect trade. I'm going to make sure that I never miss this trade. That's the second page. And then the third page is where, for you new users, all of the older Nexgen users have paved the way for you. They've posted in this room so many times perfect entries, great medium probability trades, perfect high probability trend trades. So many times, I stole them so that you can commit these looks to memory, guys. And I'm telling you right now, if you spend 25 or 30 minutes clicking through the links and critiquing them as though you were teaching the class, taking that high probability trend trade checklist and trying to hold these people accountable like a court of law, you're going to begin to see the repetition. You're going to begin to see that these patterns repeat themselves over and over and over, and all you have to do is get comfortable enough with what it looks like to never miss it. Guys, that's my first hour. Same thing every day. Every day we talk about advantages. Every day we talk about patterns. Every day we talk about terminations. Every day we just try to get you one step closer. Are there any questions? Do you guys see what's happening on NASDAQ? Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable gives this area the potential to break, but it's not a clear path. But if I needed to form a window of opportunity, it would go from my lowest point of resistance to my highest point of resistance inside of favorable large triggers. Should we see if the market bounces off that area? It's not a clear path. Can't be high probability trend trade. That's the part I want you to recognize right now. Does everybody see that that area right there at 428 is not broken? The large triggers haven't made it through. Dwight, there's your look. Only one line of the larger through. Did you guys just check out an hour ago? Nope, there we go. Cool. I like it. That's where it's most likely to bounce if this area is going to break. Somewhere between Fibonacci resistance and that mid band. If that's your trade, if you're a medium probability trend trader, wow, look at it go. You're probably going to have a limit order right below that lowest point of resistance, right there inside of favorable large triggers. You're going to identify where the market is most likely to continue. You're going to right click on your chart and you're just going to wait. Is it going to come to me? Is it not going to come to me? Is it going to put me in a trade? Is it not going to put me in a trade? And you're going to realize that you're powerless. I personally don't take this trade if divergence prints. If I get a loss of momentum along with a not a clear path, very often I choose not to take the trade because that's what my plan says. Everybody has a different plan. So, guys, I want you to do me a favor. I want you to, if you've never posted a picture in the room, post one. Let me know that you can do it. If you have a question about momentum, if you have a question about a clear path, if you have a question about entries, I want you to post it in the room. I'm going to go stretch my legs for 5 minutes. And then once I'm done stretching my legs, I'm going to come back. We're going to get to the second half of class. Second half of class revolves around looking at your pictures. Guys, when I click on your pictures, who posted one? Jose P. When I click on your pictures, I'm going to talk about momentum. I'm going to talk about a clear path. And I'm going to talk about where you got in and how you got in. And then Jose said that this was odds favorable momentum with a clear path. But Jose, you never got triggers through the 50-50 spot. You never got triggers through the divergence low, right? And then your 10 a.m. fib update kind of secured that. But it looks like there was a fib behind it the whole time. Do you see it, Jose? There was a blue fib the whole time. It was just behind a cyan line. So it was a double whammy. So it was two divergences on a 50-50, which we know jacks with the plan quite a bit. So, guys, I'm going to take a quick break. When I come back, we'll start looking at pictures. We'll talk about everything. We'll revolve it around advantages. And we'll see if we can't move forward just a little bit. Back in a sec. All right, let's get into that second hour. So I'm going to scroll to the top of the chat box. I'm going to go up to about 8 a.m. And we're just going to look and see what you guys did today. Um, what was posted in the room, the questions that you had, and we'll see what happened. I'm going to let you guys on a little secret. He's not here right now. This is from a JT Trader. Um, this guy posted 8:05. He's brand new back to Nexgen. Um, I just thought it was kind of cool. This is Jeremy. Anybody that's been with Nexgen more than 7 or 8 years remembers Jeremy. Jeremy was me for the longest time. Jeremy taught the classroom for the longest time. Um, he left his educational role back in the day. He went to go do something else to build a family, decided not to stay in that education role, and now that he is where he wants to be in life, he's coming back and he's going to become a trader. So I'm excited about seeing him posted in the room because he understands patterns. Gary does too. Everything says up on the large chart, so Gary takes a pullback to the mid band on the small chart, and you're able to capitalize. Gary, great looking trade. I took the exact same one. I took it a little differently. Same results. And then once again, everything says up. You take the pullback. You wait for the close on the correct side because it's NASDAQ, and you're able to capitalize with all that momentum. Areas with the potential to break. Nice job, Gary. Solid trading this morning. Sticking to a plan, focused. Guys, notice that Gary has a checklist. You don't use it very effectively, Gary. All respect. 50-50, anything can happen triggers wasn't a yes, right? Area inside of favorable was. Odds favorable on the 8 range, it was. If no divergence, enter the trade. If divergence, wait for a signal, and that's what you did. You waited for that confirmation. So nice trading. Solid, solid. Remember, guys, if you're going to use a checklist and post it on your chart, make sure that what you're seeing lines up with the checklist. A lot of times we phone it in. I know that I've done it. And then Gary giving me so many charts. 50-50. Multiple divergences. You decide not to take the trade. Nice job. Area's not broken. Momentum's going away. You said nope, not for me. Rules not met. No reason to take it. Nice job. Not a lot going on today, guys. Not a lot of pictures. Gene, let's see what you have, my friend. Gene, you take the 50-50 with odds favorable. And Gene, I love how you did it. Because with these divergences, it takes out the pivot stop out. You let the small triggers start to roll before you enter the market, and it works out beautifully for you. Gene, that is solid trading. Great chart read, showing amazing patience when it's not perfect, letting it roll in the direction of where you wanted it to roll. I like that look. That's a solid look, Gene. And then this was your exit. 3 divergences in the same price range. So you said, nope, I'm out. Very pragmatic, very rules-based. Nicely done. And then Jose, there's that same 50-50 with 2 divergences. It just pushes up higher. That was yours. Is that the same market? That's the S&P. Yours was crude oil. I was like, that can't be the same trade. They look different. So guys, very different results. I want you to see this. This is one of those medium probability trades. 50-50, likely to stop the mark or potential to break. 2 divergences, it works beautifully. And money is made. 2 divergences, and he gets stopped out. Which is the more common? What do you guys think? Which one happens more often? 2 divergences loser, 2 divergences winner. You already don't have a clear path. Think of it in terms of advantages. If I've already forfeited my clear path, does it make sense to forfeit that much momentum? And I think that you guys are right. It loses less than it wins with two divergences, which means you have to ask yourself, should it have a place in my plan? Or am I hoping that it works? Or are there other factors in play? So I don't disagree with either trade. Are there differences? Let's see. On Jose's trade, there's the fib and a divergence low, but it's coming from a great top. I love that look. And then you've got on Jeans, it's not coming from a good bottom that suggests continuation, and it's only one area that's not broken. And look at the distance that the triggers have gone. I'm just trying to figure it out. Well, and even then you start putting it outside of the window of opportunity, right, Jose? You've got a market flow chart. Why not use it? You would be. Oh, I mean, yeah, I guess if you put it higher, but would you keep your stop all the way up there on a 50-50 with two divergences? So here's an idea. I don't think you would because you're an amazing trader. Is you have this chart, right? You paid for it, you have it, you watch it. Why not use it? Why not use market flow confirmation in the form of the yellow reversal bar up at the higher point when things aren't perfect on that trade? Does that make sense, Jose? And let's go back to bad top, 50-50 on your 21. Good top, 50-50 on this one. I think so many people have the tools and they don't use them, which to me it just becomes noise, right? If you're gonna have it, if you're gonna look at it, but you're not using it, why are you looking at it? I'm not saying that this is you, Jose, specifically. Um, but I think I said earlier this morning, Jose, and if you need help using market flow as a confirmation chart, let me help. That's okay. Oh man, if you're not feeling it, keep it on. Oh, you're on sim. Good. When I had COVID, I blew out an account on COVID once. You don't make the same decisions. Yeah, a little rusty after vacation, so I hope you feel better. Keep knocking them out on sim. Keep giving me stuff to talk about. Because there's great lessons in every picture, guys. Win, lose, and draw. D-Rock. Everything says down, the path is clear, the entry is perfect, and it just didn't work. That's a great look, man. And you're coming from that termination. I mean, that's a great look. It just didn't work. And then here, what do you suppose the challenge is on this one, D-Rock? If we go through the process. No, it's not a range. Let's just look at the large chart. Termination creates a full reversal. We love that, right? That's awesomeness. Smalls below the large are wide, chock full of just beauty. And then D-Rock, what did you fail to notice right there? Termination, textbook, right? Price reached that blue fib, and the triggers didn't do a darn thing to get below it. And here's one of the cool things, D-Rock, and this is just a little psychology thing. You identified the odds favorable momentum. You identified the good top, but somehow your fingers didn't do the walk-in on the termination condition. Totally normal. That's totally normal, right? And then you also didn't have areas inside. So you got it. You saw it, yeah. But what a great lesson for everybody because D-Rock, I gotta tell you, man, you trade solid. Your chart reads are amazing and your adherence to a plan is almost unheard of for somebody as new as you are. So thank you for letting everybody know. that you are in fact human. It's a good look, except for that termination. And then Jose, there's that 50-50, no divergence, freaking perfect, right? Beautiful entry, best of the best look. And then what do we notice over here, Jose? Gap theory, right? Mid bands hit, large triggers are a full bar away. Again, had some great information if you looked right. I love the first target. I don't know that with this look, I would have put a stop at an area of support inside of favorable large triggers. Your stop is exactly where a possible next entry is. Does that make sense? Why not get out at your trouble spot? Yeah, don't give it all back. There's just no reason to. Because the cool thing is, Jose, and this is what a lot of us forget in the beginning, is let's say it breaks above these magenta 1-to-1s, and you just say, everything's screaming, I love it. I'll let a reversal bar or divergence take me out. But if it pushes back here with all that momentum and a clear path, I'll just get back in. I'll make money twice. So, great trade. God, I love that entry. That was them giving it back to you after that 2 divergence one. Nice stuff. And then Jerry, any thoughts on market flow lessons for newer users? I've never had any thoughts of including them. I force you guys to ask questions. I'm not opposed to market flow at all. I think that there's a lot of great information on market flow. And let me show you guys. Do you guys want a market flow lesson? And let me say the first thing that I have to say is market flow creates a whole nother chart to look at. Market flow gives you a whole nother set of things to think about. Um, and you're going to see a lot of newer people. Crude inventories at 11. Thanks, Gary. Where on earth did that one go? Wrong one. That's my 5-1. That's my 13-2. I got reversed somehow. I'm trying to pull up a market flow. Guys, market flow is a confirmation chart. Everybody gets enamored by it. I can tell you I don't really use it. Doesn't mean that it doesn't have endearing qualities, but I think that market flow talks new users into doing things that they don't need to do. It's the river buoys, according to Ron. So let's do this. There it is. And Jerry, I know that you're comfortable with it, right? Guys, if you want to incorporate market flow into your trading, try this. Go to a template and don't put anything but the trigger lines on it. Just bars and triggers. None of the market flow noise. Yeah, and Jerry, I know that you have experience with it, so I value your 2 cents on this for the lesson that I'm giving here. Is market flow or your large chart says odds favorable momentum, right? So if my large chart says odds favorable momentum, the first way, the easiest way for new users to use it is just use it to confirm momentum. Insist on odds favorable momentum on the market flow chart. That's the first thing, guys. That's the first easiest way to incorporate this into your plan. The second thing is the way that I told Jose to use it. Once you've confirmed momentum with it, let's load the good stuff back on there. Let's say that on this short, actually, you know what? We'll go back to the long once that loads. Let's say that I was thinking about taking this short, but I needed it to be from the area inside of the triggers. I can use market flow as a confirmation tool to help me decide whether or not I want to take a less than perfect trade. Um, and then there's a million ways to use it, guys. There's ways to use it when you get a good top or bottom. We teach what's called an HVA trade, which has you looking for entries at this green line, has you looking for entries at this magenta line. You can use these high volume areas when you're looking for a high probability trend trade. If they show up in the same point, it helps a lot. But the reality is that for most of you, the incorporation of a market flow chart is just more to think about. And when you give yourself more to think about, when you're not exactly sure of the thought process, it just adds confusion. Guys, price reached support and absolutely no trigger lines broke through, right? It's not even 50-50. That's a do nothing scenario. There's nothing going on there, guys. It's not a clear path. And look how the market's reacting. Slowly, they're making decisions. This is not odds favorable momentum, but it is a clear path. And it is an area inside of favorable large triggers. So if I go back to advantages, I don't have the best momentum, but I do have a clear path and an entry area, which means if I choose to take this trade, I choose to take it without momentum. Snorri, you use it on 50-50 trades? What do you look for on the 50-50 trades on your market flow chart? Guys, there's nothing for me to do. You guys don't have any more pictures. Let's talk about what you want to talk about. Do you wait for the confirmation bar? I'm just curious. Because I know a lot of people that use them different ways, right? Um, but here's the other thing is, does everybody do me a favor? Give me a Y in the room if you see that none of the trigger lines broke through support, therefore it's a termination condition. Does everybody see that? Rule number 2. There you go. I like it, Snorri. Using it to confirm the momentum. So check it out, guys. Termination condition, right? Let me show you what happens to new users a lot. New users say, but I got a confirmation. I got a market flow signal. And then I got another market flow signal. And guys, if your rules aren't met and you're trying to use market flow to enter the market, it's going to kill you. It's going to kill you because if your rules aren't met, it's going to destroy you. When John gave me the market flow chart, guys, I'll show you exactly what I did. John said, hey, check out the market flow chart. You'll love it, because he's happy but never satisfied, right? I went short, and then I went long, and then I went short, and then I went long, and then I went short, and then I went long, and then I went short, and then I went long, but then I went short, and then I went long because of a green line, and then I went long again, and then I went short, and then I went long, but then I saw the pink line and I went short. And guys, I started trading this chart. I stopped letting the large chart lead the way. So Snorri, I think you just discussed one of the best ways to use it. Use it as confirmation of the momentum. And you'll notice, guys, there was confirmation of the momentum, right? It verified, it validated. But how much chew up do you get in? Why? New users don't need it, Gary. I'm going to disagree with you respectfully but aggressively. New users don't need market flow chart. All it does is it convinces new users to make bad decisions because new users don't understand their rules. Short into a termination, short into a termination. There you go. Andy used the confirmation twice. Andy said with that much momentum, it's probably going to retest the area. Is it a high probability trend trade? Heck no. Andy, did you say with all of that momentum, I'm willing to give it a shot with no divergence on the first pullback? I'm willing to give it a shot, but I'm not going to get greedy. I'm going to manage out of it. And then if nothing changes and I get that best of the best look, I won't get greedy and manage out of it. I never disagree with you guys when you break rules. I have to point out that he's trading into a termination, especially from a bad top. Okay. So Andy, and this is, can I put you on the spot? And I definitely don't mean, okay, right on. And I'm definitely not trying to. So the things that I talk about with new users, and Andy, I know that you have a little bit of experience, right? Is if I looked at your trading plan, if you emailed it to me right now, Andy, do you have rules that say go short outside of the triggers when my large and synthetic are split and I've just reached a termination condition? Is there wording anywhere that says that? Probably not, right? Because it sounds like a recipe for problems. So my point is that Andy has done study and Andy has asked for feedback and Andy has pictures and Andy's a chart reader. And when you're a chart reader, you have the ability to capitalize sometimes on the smallest fluctuations. So if I'm a brand new user, I'm sitting in the background, I'm going, but he's breaking rules. But Andy's following his ability to read charts, right? And you notice that he's not greedy. He's like, man, I'll take 3 points 12 times all day long, base hits. So I like it, Andy. And I know that you understand the challenges, right? I know that you understand the challenges. Joel, is the path clear? Or is it a 50-50? What do you think? And I'm just asking because I know that you know the answer. Is the path clear or is it 50-50? What do you guys think? Does anyone... It's just a court of law here, right? You see those yellow 1-to-1s? It's 50-50. But you were confident, right? Because it came from a strong bottom, because the momentum is overwhelming, and because you had a cute little window of opportunity where you took the perfect entry. Joel, it's a great trade. It's an awesome trade. Where were you on the one behind it? You're getting fresh coffee, right? Scratching the dog behind the ear. That's an awesome trade, Joel. Beautiful work. Strong chart read. Termination creates the full reversal. Look at that momentum, guys. This much momentum breaks things. Joel knew that, so he took the entry at support inside of favorable large triggers, virtually no risk, and takes it right up to the problem spot, which I love. Solid work, Joel. Look how the market barely eked through. That's not smashing through, guys. Not smashing through. There was Joel's long. Gets him above everything. Then those weak triggers and no areas inside. Rules keep you safe. No more longs. 50-50. No divergence. Gets you the first entry. Divergence probably takes you out. Guys, the patterns work. You just have to learn them. That's all you have to do. Go through. What do you guys want to talk about? I can ramble all day, guys. I love the sound of my own voice, especially when I'm a little snotty from allergies. Makes me smile. What do you guys want to talk about? Current gap fill on crude oil. Let's take a look at it. That's S&P. That's crude oil. So what is D-Rock talking about? And the time it took me to say that, it changed a little bit. Guys, this little white bar is what we call a reversal bar marker, right? So if price reaches a midband on your large chart, Absolutely, Big L. Price reaches this area, this mid band right here. If these large triggers remain above the reversal bar marker, it's a gap, and it's a gap that likes to get closed, and it's what we call the gap theory. And it's like a slingshot, really, is what it is. Let me find a picture of it. When price accelerates fast and far away from those large triggers, and it smacks into something, it's likely to close the gap. And that's exactly what D-Rock pointed out, as they came down to this mid-band, and here the large triggers aren't quite a full bar away. They're straddling it. So what that means is D-Rock, I could literally come up and hit that large trigger and start back down and never form a reversal bar. Does that make sense? Which means that they're not a full bar away. It doesn't mean that I'm going short right here yet, because I still don't have areas broken. But do you see the difference? Let it be above the reversal bar marker to create the expectation that it will close the gap. That was a good example. That was a great example of how to use it. And then you can go back and you can see times where, well, hopefully we can, where the large triggers were in fact a full bar away, and that's when it's most likely to close that gap. All right, Big Al, good tops and bottoms, huh? Strong tops, strong bottoms. It's a very simple recipe. Termination creates a full reversal. That's the whole idea behind good tops and bottoms, is that price has reached a termination and the market reversed off of it. Price reaches a termination and the market reverses. So that's the basis. That is the nuts and bolts, the wording. And here's a picture that kind of shows it. So, and I've got it written out. No triggers through as a termination, right? Not potential to break, not overrun, but literally price reaches and absolutely no triggers break. Guys, this is the groundwork for a strong top, for a strong bottom. So Al, everything comes up and hits Fibonacci resistance and absolutely none of the trigger lines break through. It's a termination condition. Is everybody comfortable with that part? This is a key part to identifying these strong tops and bottoms. So this remains a termination, Big Al, until that full reversal happens, until large triggers go from green to red, smalls get below, all of that. So when this termination creates the full reversal, we're going to call it a strong top or a good top. And this is good, like this is money in the bank all the way until that next termination condition. Right? Just because we have a good top or bottom doesn't mean that everything beyond it is going to break. And here price reaches Fibonacci support, no triggers break through. This is a termination condition. When these large triggers go from green or from red to green, now it's a good bottom all the way back here. But really this picture is kind of caught in a channel because it reaches the next termination. And then it's this termination that creates the full reversal. That's the one that wins out, that pushes down. So you'll see these all the time. You'll see terminations that create full reversals, but you still have to respect. And if you look at crude oil, you can very much see how they got caught in these areas, right? But then there's that termination that creates a full reversal, Al. And when it doesn't reach the next one yet, and it has odds favorable momentum, that's that absolute rock star trade. And that's how we use them as new users. Is when that termination creates the full reversal, then gives you odds favorable and a clear path, that becomes the best, highest probability trade ever. Does that help a little bit? So a great drill for you guys is just scroll back and go, there's a termination. Does it create a full reversal? It does, but it goes right into support. There's a termination that creates the full reversal, but look at that, right into the midband, and the large triggers are a full bar away. The fight's still happening. And then it retests. There's that full reversal, and then you start looking for opportunities. So, great question. So, we've got a full reversal here, and I've got odds favorable momentum, and I've almost got a clear path. Big Al, would we call this a strong top? Perfect. Because it's not a termination that created the reversal. Awesome. You're an amazing student. But it really can be that simple. Does anyone else other than me try to overthink things sometimes? Yeah, all of us. I saw the funniest video the other day. I should post it in the room. It was Jeff Foxworthy, and it was just one of his comedy things, and it was talking about how the difference between brains, how how you can take the most simple thing and try to overcomplicate it. And he got a text that says, "Pray for Bob, he was in an accident." Right? And that's all the text said. Pray for Bob, he's in an accident. So he shows his wife, "Hey, pray for Bob, he was in an accident." And his wife goes, "Well, was Bob driving?" He goes, "Well, I don't know. Pray for Bob, he's in an accident." She goes, "Well, were the girls with him?" She's like, "I don't know. This is what the text says." "Well, did he this? Did he that? Did he do it?" And the reality is she overlooked all the information, the only important stuff, and tried to keep compounding into it. And Snorri, you know what? We try to. The fact that you were 80% winners without market flow, but now you're using it, did you need it to be successful? And I like throwing this out there, and it doesn't mean that you shouldn't be using it, but if you are finding 80% winners with the most basic of plans, is it because you want more of it? And I ask people, and I'm not saying don't use it, but saying ask yourself, or are you starting to add trades in that don't fit that solid plan, right? Now you're at 75. And that's how it happens. And this is such a real phenomenon, Story, is people take success and they decided that they wanted to be more successful, that 80% winners wasn't good. So what if you took that 80% winners, you eliminated the maybe trades that market flow's given you, and you add one contract? What do you suppose that would do for your trading? It's the 30-day stupid. Do you guys all know the story of the 30-day stupid? I think I told it yesterday. It's true though. Snorri, were you in here for that conversation yesterday? And it's not meant to say anybody is stupid. It's what your brain does to you after 30 days of success. Nobody in this room is stupid. Well, maybe. So the 30-day stupid. So Snorri, I used to train managers. So I worked for a huge restaurant, 100, well over 100 stores. And my job is as they were opening restaurants across the country, they would literally fly managers into me so that I could turn them into managers. Like they would bring me recruits and stuff like that. And my store was the training store. Um, and Snorri, if you came into work for me, the first thing that I would do is we talk about the basics, right? But then I'd give you this checklist that says, hey, this is your path for success, Snorri. This is going to get you exactly where you want to be. This is going to make sure that you're not making mistakes. This is going to make sure that you're focused on efficiency. This is going to make sure that your day goes smooth, right? And when you do that to somebody who's brand new, it's easier for them to put their ego on the side. A lot of people, not everybody, but it becomes easier to put your ego on the side. But then what happens is about 30 days in, you begin getting accustomed to being successful because you refuse to deviate. You get accustomed to never having problems in the shift in the restaurant industry because you never deviate from those things. But you notice the people around you do it a little differently. They don't do it as easily, and you forget that they've been managers for 20 years. So right around 30 days, Snorri, your brain is going to tell you that you don't need everything that brought you success. Your brain is going to tell you that your plan is too simple, that there's more opportunities. And sometimes there is. But right around 30 days, you're still not set in your ways. And this is where most people abandon the plan. And this is where most people start adding charts. And this is where most people start increasing the number of trades that they take. And this is where most people start to lose. Um, this is where they start giving it back. This is where they let chart reading rather than reading, than following rules take over. And it is. It's just being human. It happens to everybody. But I'm that giant burr under your saddle that reminds you, Snorri, that you were a better trader without the complications, that you were a more successful trader without the complications. Um, and and I'm not saying that you can't be successful with a market flow chart, but if your success level has gone down, you have to see if you're making decisions based on a market flow chart rather than your core plan. And that's how you get there. And yeah, D-Rock, you're so right. It's just being human. Who's trading in determination conditions? Hopefully nobody. Gary, you can't post it at 11:01 if the news is at 11, silly. That's crude oil inventories. They're trying to figure out what to do. The trend is up, but it's into a termination, right? Smalls are above the large are down. Guys, there's nothing to do there. There's nothing to do. So do nothing. It's hard, right? So Snorri, that's my story about the 30-day stupid. And we can call it the 30-day silly if anybody is offended by the word stupid, but it was just a funny way to do it, to talk about it. And it's kind of like, golf is I'll have a great round where I'll focus on my swing, and then I'll decide that because I shot 86 the other day, I'm going to show up tomorrow and swing harder with more bend in my arm, and and I'm probably going to shoot 112, right? Because I've decided that I'm so awesome off of that little bit of success. So I'm not worried about you. Not worried about any of you guys. You have a solid plan and you'll learn to deviate it. And when it's okay to deviate it, just give yourself a little bit of grace when you stumble. If you stumble, finding yourself deviating from the plan a little bit. Um, it's just totally normal. Totally normal. Guys, there's that divergence high with absolutely no triggers through it. Isn't it crazy how easy it is to recognize where the market may stop? Where there may be a reaction that's not advantageous? That mid-band is caught in between trigger lines. Does anyone else see their rules not met and stay out of a trade and get excited? Oh my gosh, my rules kept me safe again. I do. I still do. Get excited all the time. And guys, I just got, Joel, can I share this? Joel, can I share the picture that you just gave me? Guys, I want you to see this. This is a scam. If you ever reach out to tech or anything and they ask you for money, especially crypto, guys, this is a scam. Block them. This happened to my buddy Jeremy yesterday, and he sent me a message. He goes, "Why the hell are you guys charging for tech help? This is a scam. Report it. Block it. Don't let it happen. We got to figure out how to make that go away." That happened too. PFI sent me a message once, and he got the same thing asking for money. So, guys, there's bad people out there. Yeah, and if you know Jason, you know better. Nexgen will never ask you for money via text. Nexgen will never ask you for money via Skype or anything like that. Nextgen's going to ask you for money when you finish your demo and you realize that this stuff works. All right. Andy took the last short into a termination condition, didn't work out. So you went the other way and it worked out. I like it. Isn't that funny, Snorri? It's the angel and the devil on the shoulders. So, Andy, even better look than trading in the termination conditions earlier. It just doesn't work out, right? 3 wins, one loss. I like it. And your wins are bigger than your losses. Nice job. 50-50 doesn't work. Andy knows that when the 50-50 doesn't work, you got a good shot going the other direction. Nice trading, Andy. And then D-Rock, odds favorable. I like that one. Didn't reach. It's not 50-50. Everything is there. You take the perfect entry, hit your first target, decided to keep the stop in place because of the momentum, and you take a small loss. Dude, D-Rock, that's perfect. Rules met, you didn't hesitate. That's the key, right? You took the best entry. Because you took the best entry, you were able to take profits. And I see that you're pulling break even out of the equation. So you're starting to develop your management plan. But you still had it exactly where the market shouldn't go. That's awesome. It's a great trade. It's great management. It's hard to be willing to take a $50 loss sometimes because your brain says, but that's cutting our profits in half. But you know that with that much momentum and the path still clear and only two divergences and strong triggers, it's got a better chance hitting that fib than it does reversing from the middle of nowhere. So solid trade. Solid trading. All right, guys, that's the second hour. Look at this market trying to figure out what the hell it's going to do. Ugly. Look at this market trying to figure out what it's going to do. Look at this market trying to figure out what it's going to do. I'm going to leave you with the S&P. We'll see what happens. Guys, I'm going to take a few minutes. I'm going to go stretch my legs. I would encourage you to do the same. Very nice, Gary. When I come back, last hour belongs to you guys. So if you have questions, if you have something that you want to cover, if there's something that you need a little help with, it would be a great time for you to post that question in the room while I'm on break. And I'll be back in about 5. I'm going to go reload my water real quick. All right, y'all, here we go. Last hour. What do we see on the S&P? We see a termination that creates a full reversal. Sorry, I'm sucking wind. The momentum is strong. The trend is up, but the path is not clear, right? That's how quickly a chart read happens, guys. I have momentum because of strong triggers, right? Termination creates a full reversal. Everything's going up. But this area is not clear. This 0567 area has not been broken by the trigger lines. So you have to make a decision. What does your plan say about taking this trade if it sets up? You don't have that area, Snorri? Are you on 7 or 8? 8? Do you have tick replay set up so that it's showing your synthetic fibs? Because this fib is this fib. You are in Eastern time frame. Did you do the clean out? Each and every morning? All right. So it's, guys, I never think that it might not be me. So watch this. I'm going to do something. And I'm on NinjaTrader 7, but this is one of the things I like to do. Is I'm going to disconnect from my data real quick. And that's going to stop my charts, but I'm going to go to my options section. You can do this on 8 as well. And I'm just going to reset, and I'm going to repair my database. And then I'm going to reconnect, and they're going to recalculate, and we will see if it was me. And it might have been a story. It happens sometimes. Gary, up 87, 875 in Top Step. So let me ask, because I think that this is a pretty cool question, something to think about. What's your daily goal? If you don't mind me asking, does everybody have a daily goal where they stop trading? $1,000 per contract or for the day? I like it. I think that's great. So what happens when you hit 1,000? Do you just stop trading or do you trade till a loser? And I'm just putting Gary because he's telling me where he's at here. So you're looking to make 500 a contract. Perfect. Do you have a number where you will stop trading for the day? Like me personally, if I go down 300 a contract, my day's done. I just stop, I wait, and I get ready to fight again another day. And the same thing is, as I only try to make 250 a contract. So this morning, I hit my goal. So you're willing to go down 750 a contract, but you're only trying to make 500 a contract. Okay, that's interesting. I like it though. It's good to have those things, right? Um, Snorri, I still have it. It may be just a data glitch. How many days back are you? Are you 10 days back? 10? Yeah? Huh. I'm not sure. Somewhere you and I have just a little discrepancy. So let's go to the peanut gallery. Does everybody have a fib around 0567? Or is it just me? Because, you know, my brother wrote the software, so he might give me extra fibs when nobody's looking. You never know. Everybody else has it? So, Snorri, this one might be you. Haha, it's usually me. So, um, you may want to try the same thing. You may want to try the reset. Yeah, and D-Rock, that was for NinjaTrader 7. So for NinjaTrader 8, it looks a little different. Dun, 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 dun. So on NinjaTrader 8, you have to go to Tools and then your Database Manage. And then from database manage, you have your reset and your repair tool down here. Um, but I'm fairly certain that NinjaTrader 8 forces you to reboot NinjaTrader when you do it. So you'll want to be definitely disconnected, and then you have to reboot it. So closing your workspaces and stuff. NinjaTrader 7 makes it a little bit easier, I think. But NinjaTrader 8 looks cooler. And that's all in the user software guide. Like all those NinjaTrader how-tos, everything I know about NinjaTrader I learned from the software user guide. So you can usually find those answers in there. And then if you ever need help with it, of course. So now we're odds favorable, and even Snorri has a clear path, right? But it gives me an extra area inside of favorable large triggers. Whoops. Let's put that on sim. Potential pullback. Area inside of favorable large triggers. The path is clear. The momentum is great. Guys, give me a Y in the room if you see why I activated that potential limit order. Could we put the checklist up against it if we took the picture? And guys, if you have Snagit, you can do this. It's kind of cool. You can literally take a picture of the checklist and then I can put it on there. Man, yeah, D-Rock, it's as close as you can get on that large chart. It's as close as you can get on that large chart to being broken through. And remember, it's coming up while the market comes down. So we're coming from a good top. We do have odds favorable. There are no terminations, and there's areas inside of favorable large triggers. Guys, I'm obligated as a rules-based trader to try and get into the market. And then D-Rock, there it is on my large chart in the moment. And then because they're two different time frames, do you see how it puts that support right inside of favorable large triggers? That's it, guys. That's all I can do. I can't make the market retrace, right? I can't guarantee myself a win. But what I can do is put my rules up against it and then determine whether or not I have a statistical advantage to enter the market. My rules said that I did. So I'll leave my limit order there. Look at that. It should be a tick or two above, right? And then my stop is where the market shouldn't go. My first target's at $100. My second target's at $200. Or if I'm D-Rock, my second target is at Fibonacci resistance, where the market is likely to go with all this momentum. So there's nothing for me to do until this gives me a reversal bar. If it gives me a reversal bar, then I'll reduce my risk below that reversal bar. If it doesn't give me a reversal bar, that means that it's going to go down and hit my stop. 12 ticks. Is everybody good with what we're seeing right now? Do I have the advantage of momentum? Absolutely. Do I have the advantage of a clear path? Without question. Do I have the advantage of having entered the market where it's most likely to continue? I can say it without hesitation, guys. This is a high probability trend trade. I just made $100 and I'll go break even. How cool is that? 0750 to 1150. There's your $200 trade right there. Guys, this is the high probability trend trade. This is the exact same thing that we talk about every day. This is the exact same advantage, the exact same entry, the exact same everything that I repeat like a broken record day and night. And there's nothing for me to do. I'm either going to get stopped out, break even, or it's going to go to my $200 target, guys. I don't have any control over that. But as a brand new user, I like it, Gary. If you Congratulations, ladies and gentlemen. You just made $300 on a high probability trend trade. So here's the question. If you hesitated, if you weren't sure, if you were worried, now is the perfect time for you to ask. What made you hesitate? Why didn't you take it? Jose, it just didn't get your entry, huh? I noticed that the mid band was coming up. That's why I readjusted to get 2 ticks above it. Sometimes that happens. D-Rock, you got filled. Did you hold for the second fib? Distracted, didn't adjust. I've done that. I almost did it. What about now? Do I still have smalls outside of the large? It's only 2 divergences. Do we go again from the area inside of favorable large triggers and put our stop where the market shouldn't go? This one doesn't have the strength, right? This one's less likely to work. We're going to get back some profits, potentially. But it still fits the rules, doesn't it? Odds favorable, nothing in the way, the path is clear, area inside of favorable large triggers, stop where the market shouldn't go. Could I defend this one in court? Gary, what's hell no? It doesn't fit the rules? Second divergence kills a trend for you? Okay. When I have a clear path, I expect this second divergence to take out that previous pivot. It did it. Let's see if that momentum and direction carries us. It may not. I'm okay if it doesn't. There we go. It got me. I came out of that scenario up $100. That fits my rules perfectly. Everything about it. That loss of momentum just pushed it lower. I don't care. I'm still up money. But this is a great lesson. If you catch the first one, look at how strong the triggers are on the first one. Look at how weak they are in the second. Only 1 divergence on the first one, 2 divergences on the second. Better separation on the first one, less on the second, but it fits the rules. That's it. It fits the rules. That's all you can do. Did you take the first one, Debbie? This is one of the things that got me a lot, is I hesitated on this one, and then I felt remorse, and then I catch the loser, right? I could defend either of those in court 100%. 100%. Alan, beautiful entry. Money, money. Beautiful entry, money, money. Distracted happens, Debbie. It's my golden pipes, right? They distract you. Joel, what happened on the entry? Why so late? Miss your order? Hopped in anyway? Not this time. 0750. All right, you hear me. What happened with the hesitation? Distracted? Oh, trees being cut down. Goodness. Had to think it a couple times. Either way, it doesn't matter. You still had every advantage when you got in, right? And your exit's beautiful. You got fibs that none of us have. Solid trade. All the advantages are there, Joel. Nice job. 2 for 2 today. Missed the first one. I always love the first one best. If you can catch it. I always love the first one best. Joel, you still had every advantage in place where you took your trade. It is just a little bit late, but your risk was already established. That one fit the rules, right? So maybe we're going to get a lesson on continuation. Well, in D-Rock, let's think about why. And I love doing this. And let's try to use all the terminology that we use in the room. This is where decisions were made, right? This is where the sellers said, I'm taking profits. This is where the buyers said, let's push in the other direction. And when the buyers pushed, they're excited. And they're like, oh, yeah, here we go, here we go, here we go. And they're excited and they're pouring money into the market, pouring money, pouring money. Look at the gap between the small and the large. The buyers are frantically pushing up. Well, as they push up, half of them might have jumped ship at this fib, right? Half of them might have taken profits right there at that fib. There it was. There's that bounce. And then the ones that remained said, oh, no, we want that next fib. And they start pushing, start pushing, start pushing. And it's right about that fib that this gap starts closing. And they're like, ooh, I have fear. Is it going to make it? I don't know. I'm going to jump ship. And the momentum goes away. I still have fear. There's less of us here. Uh-oh, the momentum's going away still, right? And all the way up here, the momentum's going away. We were able to catch it right there, make some money. Notice how far away that is from the decision-making processes. It's damn near dead center. And then the triggers come back to the top, and your small chart starts showing a bunch of slowdowns, right? There's 3 divergences in the same price range. There's that lower pivot. So the further you get away from the decision-making point, I guess is kind of my idea. All that momentum, they're excited. See how it's huge and how it slows? And then when it gets to the next decision-making point, it gets huge and then it slows. This is why we trade in between fibs, guys. That's why this one doesn't ever give you an entry, because everybody that went long here knew exactly where they were going. Can you go again on the second entry? Of course you can, if the rules are met, Snorri. Let's look at the difference between the 2 entries, though. Okay, so let's do 2 charts. I mean, you can see it on my chart where I did it. Let's go through both. Oh, you have a term. Snorri, you're rocking different fibs than we are. I think Joel had a termination as well. My chart may be off a little bit, guys. Because Joel and Snorri, you guys both had fibs right here, right? Which said absolutely don't do it. Those of us that didn't have the fib there, that fit the rules perfectly. So Snorri, on my charts, it's a great looking trade. On your charts, it's financial suicide, right? Does everybody have a fib there? Ron, you didn't have the fib. D-Rock didn't either. Guys, little fluctuations. Little fluctuations can make a difference. Trade your charts. I would defend this one every day without the fib. Snorri, if I had your fib there, there's no way in hell I would ever do it. Let's reload data. I got divergence there, Ron. Absolutely. And then Tony, you've got it at 14.5. I'm reloading historical data right now. Let's see if it changes the look. We've already repaired the database, right? The only thing left for me to do would be to delete everything and start fresh. But I'll trade my charts. So for those of you that took the second one, it was a good trade. Yep. I do too, Ron. I've got the 14.5 fib. You and I are on the same boat here. And then Tony, you and I are on the same boat. You've got the fib at 14.5. Somewhere there's a corrupt piece of data, or maybe a different midnight, or maybe NinjaTrader was left open overnight. There's little things that can change it. Always trade your charts, guys. Always trade your charts. Yeah, that's just my data reloading. Here, I'll give you something to look at. There's your golf club. New users. Anthony, how you doing, bud? You're quiet today. Just started a few minutes ago. Right on. And guys, I'll post today's class on the YouTube page as soon as I'm done teaching it. You'll be able to go to YouTube and go to live. And when you go to live, I post the day's class in there. So I'll give you guys the link. So I like this because maybe you and I have a conversation about a chart and you're like, whoa, that just blew my mind. I'm a step closer now. You can go back and you can relive that on the video page, right? And make sure that you have it. If you just want to reinforce the rules a little bit, you can do that on the video page because the first hour is always the rules, going through it, talking about it. Um, I'm a firm believer. Recognition comes from repetition. We're almost there. There we go. No, even with reloading all of my historical guys, it's still, I don't have it. So good stuff, Snorri and Joel. Kept you out of there. And then Joel's picture was up here. Where did it go? Yeah, very different look. Very different look. And you guys are for sure, if you go to data series 10 days back, that fib costs extra. You would think my brother would just give it to me, right, Alan? Because if I blow out every day, I'm just going to ask him for money. So, Snorri and Joel, 10 days back, you didn't have to go through and do that 9 day or something. You are 10. Huh. All right. We'll see what we look like tomorrow, I guess. Or let me pull up NinjaTrader 8. I'm going to see what my NinjaTrader 8 looks like. I always say trade your charts. My brother and I will do this in the morning where we don't look the same. And he's like, "You're broken." And I'm like, "No, I'm not. I can't be." And it turns out that he's broken. But it's just when you're dealing with thousands of ticks. You did a full download and restart today? Okay. I gave it an enema about 2 weeks ago. So I didn't do it this week because I was traveling. Um, I'm pulling up my 8. I'm going to see if my NinjaTrader 8 has it. Nice job, Gary. Hang it up, go to the gym, go get some deep dish pizza. Great work, man. Great work. And then I'm still calculating over here. Once that's done calculating, I'll take a look and we'll see if my 7 and 8 match. Or trade on sim, sure. Just make sure that you trade your rules, right? The same rules that got you where you are. Um, Man, let's see if there was a different set of circumstances anywhere. Terminations for the win. Love it. Once again, terminations and three divergences in the same price range. Hopefully nobody's going short on hope there. And I'm still calculating. It's hard to run NinjaTrader 7 and NinjaTrader 8 and Discord. My poor little computer is chugging. I can hear it. I think it wheezed a little bit. Has anybody heard this before? To minimize your learning curve, post your pictures in class, win, lose, or draw. You need to know what you've done right and wrong. That's what we do here at Nexgen. Give you supportive supports every time you do something. Um, Gary's like, Mark, I'll give you something to talk about. Nice job. 80% winners. And you know what I noticed today, Gary? Is that you kind of abandoned some of those hope trades that you had and you kept it very focused on making sure that you had the best. Would you agree with that? Starting to find that patience piece. You know what my favorite part about this is, though, Gary? Is you took almost $600 in losses and you still won 81% and you're still up almost 2 grand. Guys, small losses are a normal part of a positive equity curve. Gary's little thing here proves it. And then it doesn't look like my S&P even has tick replay on it. It says it does. Sorry guys, I'm looking at my NinjaTrader 8. I'm missing tons of fibs. We'll see if they come up. Makes a difference, doesn't it, Gary? Anything over a 2 lot scared you because your brain said that we can't deal with these sort of numbers. Made you jumpy on your exits. I've done it. So how do you avoid channels and chop? Rule number 2, rule number 1, insist on momentum and a clear path. That helps, right? So guys, when you find things that make your trading better, share them in class. Say, you know what? I kept forming opinions about areas likely to break, and I kept losing. And when I eliminated that, I started winning. I stopped taking these weak trigger trades at a fib just because it's a clear path, because it overruns a lot, right? So everything that you do is what's bringing me success, what's taking it from me. That's, guys, that's just being an intelligent being, is going back and studying the mistakes that you made so that you can avoid them next time around. So, um, good stuff. I love it. I love it when you guys find success. It really does. It makes me happy. Keeps me focused. What do you guys want to talk about? I think we got all the questions answered. There's no pictures to post right now. What do you guys think? You want to call it an early Thursday? Nothing to do in the S&P. Not the best trading for you today? Thanks, Joel. Can I ask why, D-Rock? I can usually identify why my trading day isn't a great day almost instantly. And it usually revolves around breaking a rule somewhere, whether it was intentional or unintentional. I can almost always go back. Sure, Gary. So the synthetic triggers are these step triggers on your small chart. But D-Rock, yeah, I can almost always go back. Rules not met, my percentages go down. Are you good with that, Gary? Just this is the view, right? That is your synthetic trigger. And your synthetic trigger is nothing more than the large trigger on your 13.2. Cool with that? So how do we use it? We use it for entry. Um, and we use it for entry when we let the synthetic trigger and the large triggers, excuse me, play nice together. And that's the easiest way to put it. Is when your synthetic triggers, Gary, and your large triggers are one on top of the other. You know that entries come from areas inside of them, right? So we use the synthetics just as an aid. We know that when they're trending with the large one on top of the other, it's going to create your smallest window of opportunity, the smallest area for entry. And it's just a pattern. So if you guys have ever met my brother and watched him for any amount of time, he stares at the market and things jump out at him. Whether it is the rules that you trade for the high probability trend trade, whether it's a high volume area trade, if it's a pattern from market flow. Guys, his brain never stops looking for these things. So what he found, Gary, is that instead of only having large triggers, when you couple them with the synthetic triggers, it just creates this advantage that goes through. And then the idea of favorable large triggers, where they are one on top of the other, creating that smallest little spot where the market is likely to continue. And I've got a picture that I want to share. Let me find it. Um, Split triggers. When your synthetics and your large separate, they're moving averages. Um, Price corrects is the easiest way to put it. It's like correcting an oversteer, right? Price accelerates away and it corrects. And when it corrects back to areas inside of favorable large triggers, that becomes our entry point. When those trigger lines are no longer favorable, when your large and your synthetic get that gap between them, you're not sure where the correction is going to happen. It creates this huge space of uncertainty because it may go to the synthetics, it may go to the large, it may go to the mid band, it might drop to the one-to-ones. And what you do is you find yourself with this enormous amount of risk. So Gary, I hope that helped. We use the synthetics as a tool with the large to allow us to have the least amount of risk on trades when we enter. Does that help a little bit? I hope. So here they're split. And my window of opportunity would go from 83 to 73. That's a good, my highest point of resistance to my lowest point of resistance in those triggers is almost 14 ticks. I do have odds favorable, and I do have a clear path, but I've got about a millisecond of time between reversal bar and entry decisions. Look how big the area is here. So that's how we do it. I hope that helps a little bit. Miss Debbie, have a great day. Beautiful weather out today. Go enjoy it. We made it to Plano, and it is gorgeous here. You're welcome, Gary. Great question. Great question. And guys, this is it. Rinse and repeat. What are you going to do? How are you going to do it? What's your favorite look? How are you going to enter it? How are you going to gauge advantages? And how are you going to assure yourself that you can do those advantages every day, right? That's have a plan, understand your advantages, ask a lot of questions, And have fun. Simulators should be fun. It should be like learning to play a video game. Are any of you guys old enough to remember back when like Atari 2600 came out with Pac-Man and there was a pattern that if you just followed it, you could play forever. Like you would never die. The ghost would never get you. It was a magic pattern put in by the programmers. Guys, what we do is almost the same thing. There are patterns that create success, and when you deviate from the patterns, you find that your success dwindles. Um, the idea is to study the pattern until it becomes second nature. The idea is to understand the advantages so you can make a choice whether or not you're going to fight those. Um, and it takes a little bit of study and it takes a little bit of time. Nobody ever got great at this in a week. I've never met anybody that got great at it in a week. I have met a lot of you guys, you're in this room, that got very consistent and profitable inside of the first month, but you did it through simplicity. Which S&P trade? No, I mean, you can. Your large chart, remember when we blew it up? There's your tail, there's the triggers. Man, D-Rock, you can call it whatever you wanted. If you didn't take it, that's cool. If you did take it, that's cool. Does calling it a 50-50 change where the trade comes from? The only thing that it changes is whether or not you take it, right? You exited with divergence. I love it. Great exit. But when you had divergence, your large triggers were clearly through, right? Because you got divergence up here. That was your pivot high. Didn't you have like a crazy clear path? So even if it was 50-50, and I think this is a great question, 50-50 means that the area has the potential to break, right? So by the time that divergence printed, was it still 50-50 or had the area broken? At that point, the path was clear. So, yeah. So it changes the dynamic a little bit. I took the second trade too because I had a clear path and strong triggers. Shit, I took it live in front of you guys and got stopped out. Where was your stop? I lost 8 ticks. 8 ticks. Perfect. So D-Rock, you and I did the exact same thing. We saw the exact same advantages. We saw the exact same entry. We saw the exact same stop placement. And we're 3 years apart. It's just chart reading. Great job. Ron says when everything says down and price clears the path, he's going to take a chunk. Nice job. In after trouble, out before trouble. Ron, I love your trades. And Tony the Tiger says, you know what, Ron? I can do it too, brother. Tony, you took a much smaller nibble, though. You got 3 ticks. What happened? What scared you out? Was it just because you were on sim? Okay, you're like, why bother? Man, I think we all did that. We were having a good laugh about it the other day, Tony. Everybody does that at least once, and it's always the amazing trade that you look over and you're like, oh, son of a gun, I'm on sim. I do too, D-Rock, but when you think you're in your live account, that always seems to be the one that's the easiest, most profitable trade ever, and then you look over, you're like, oh, that was sim. So I think when Tony realized that he wasn't in his live account, he realized that it is what it is, right? You'll get there. Is Biden speaking today? You just went to live real quick. Oh, did you catch it? That's awesome. That's awesome, Tony. Nice job. You're like, whoa, that's still the right trade. Let's get paid. Nice recovery, dude. I love it. Um, I'm just curious. Usually, news will tell you if Biden is speaking. Um, like the other day, he was speaking, and it said it somewhere. Thursday, it doesn't look like he has anything to say. Nothing scheduled anyway. I'm sure there's plenty for him to talk about. Who took the 50-50 trade with three divergences? Anybody? With the higher divergence? Not speaking. Thank you, Story. I didn't even know that there was a White House website. Not at all. Guys, I guess that's it for me today. A lot of great questions, a lot of great lessons, a lot of great trading. Um, oh man, D-Rock, I'm so happy to. I hope you guys can hear it in my voice how much I enjoy this class. I really do. I love teaching this class. You guys make me a better trader. Um,